Good afternoon, everyone. Today I'm chatting with Mark Morris from legalclosing.ca. Guys, we normally don't have a lot of real estate guys on this channel because, quite frankly, the internet is filled with mortgage brokers and real estate agents who are making lots of content for you. However, I think that if you are investing in the Canadian stock market, you want to have an understanding of how capital flows. So I thought it would be great to have Mark on because Mark is a lawyer and he is on the ground floor of what's happening right now in the Toronto condo market. And I think that that is a really important thing to keep an eye on if you are trying to figure out how you want to deploy capital in Canada in regards to where money is about to start flowing. And if you're trying to just have an eye on where opportunities may arise and when things may pick up again. So I thought it'd be great to have Mark on to talk about what's happening right now with many of these power of sales that we're seeing in the Toronto real estate market, as well as where he thinks things could be heading over the next couple of years, so that you have a little bit of a lens to look through when we're talking about the macro environment here in Canada, especially with regards to the capital markets. All right, everybody, enjoy the interview. Mark, thanks for joining us.
Oh, thank you. It's a privilege to be back.
So, we normally don't have a lot of guys like you on. We're typically focused on the equity side of Canadian companies. So, talking with this morning, we talked to a $2 billion gold company's CEO, and that's normally what we do. But I feel like real estate is such a big part of the picture for anybody who's investing in the stock market in Canada to understand how capital's flowing. It's certainly attracted capital away from the Canadian stock market. So I like to have at least a bit of a picture for our audience that's trying to figure out how to deploy capital, when to deploy it, where to deploy it, and kind of understand how everything's flowing. And the reason that I particularly like chatting with you and always enjoy your commentary whenever I see it on social media is that you have a particular lens that you get to see the world through that we're not going to get if we talk to a mortgage broker or if we talk to a real estate agent, because ultimately, let's be honest, they want to just go and make money and do sales, and they would like a bull market. I feel like you are getting to see things from the side of the people who are in pain and are struggling. So maybe I know we've had you on before, but maybe just to kind of set it up for our audience, what is it that you do for your clients?
Yeah, totally. First of all, I'm very honored to be following someone who controls $2 billion of assets when ultimately what I do is I spend every single day working with individual people who are purchasing small time condos or homes, really residential real estate and conveyance. That's primarily what legalclosing.ca is about. But you're right. It fundamentally, to the extent that small mom and pop invest in the stock market, the real estate market has, for many years, been an avenue which has diverted capital in a substantive way. In fact, you know, I say this without joy, but it's true. Canada's market is not as resilient as the States. It just isn't. And that's not to knock Canada, by the way. Most Western democracies are not as resilient as the markets that we see in the States. And accordingly, we don't really have the same opportunities with our capital beyond stage sort of investments, which could involve, of course, equities or alternatively, residential real estate. And residential real estate was something that has, for the past several years, really entered into a bubble territory that would be very familiar to many of the listeners that you have in equities. I mean, we replicated what was effectively the dot-com boom in our condo market and in the other markets, partially, but particularly in condos, because condos acted as a future contract. Like what it was thank you very much. I agree to pay X in 5 years for a product that's going to continue to go up. And I can price that product, builders thinking I can price that product to 15 points above. But so long as people would make more than 15 points, they would be in for their deposits alone and then take the value of the futures, right? And so effectively, it almost felt like a market. And so the capital was diverted from mom and pop into condos and into homes and into the bubble economy that was Canadian real estate, um, which, of course, is no longer bubbling.
Yeah, I'm happy that you use that analogy because I've been thinking about that recently. It's a lot like buying call options, right? But there's a fundamental difference is that if I buy call options of, let's say, some stock, and the stock's trading at $60 and the strike price is at $80, and the price never gets there, well, they just expire worthless, and all that I at risk of losing is whatever I paid for those call options. But when we're talking about pre-construction condos, it's like I have to exercise the strike price.
That's right.
And that's a fundamental difference. And I think that that's why I'm so excited to have you on here. It's that it's like people were buying these call options where they actually have to execute.
Yeah, and it's funny because I started by saying that the Americans have a bit more of a dynamic economy. Actually, the strike price that you were talking about, and the loss that is endemic in the Canadian real estate market doesn't replicate itself in Florida or anything else, where you're in for your deposit alone. In fact, there's other jurisdictions in the world. In England, they have something called gazumping, where even having a deposit down doesn't necessarily mean that you are going to be forced to actually conclude your deal. But in the States, you're in for the extent of your deposit. And really, because Canada is influenced by so much of the media from the States and everything else, a lot of Canadians entered into real estate believing that they were only in for the deposit amounts that they had put down, effectively the option. Uh, but actually, as you allude to, in fact, you are in for not only the full price, but should you fail to close, the damages that result to the builder for seeking to effectively compensate for its damages. And so people are in for worlds of hurt. And these are very dangerous options indeed.
That's so interesting. I remember when I first met my wife, we went to Florida together, and I remember us taking a trip to Orlando, and we were at a burrito place in downtown Orlando, and this was like 2009, maybe right after kind of the crisis. And I remember seeing this beautiful condo building that was looked like it was fully completed, but it was gated up and boarded up and nobody lived there. And now that you say that, that kind of just kind of rings a bell. It's like, okay, probably what happened there is you had a ton of people that put down deposits. The builder went through with building it, but nobody closed.
And that's actually what's starting to happen in Ontario too. The difference is that there is an avenue to pursue loss in Ontario that doesn't. So it's very pro builder, but very anti consumer. After all, the most vibrant economies, if you think about it, the most vibrant economies are the ones that allow you to recover from your bad investments the best. The ones that have the easiest way to get out of bankruptcy, the ones that allow you to go bankrupt, that encourage you to go bankrupt, and actually have easy processes, are the ones that have the most dynamic economies effectively, right? Because you could start again. There's an encouragement to take risk. And that's the way that the States is designed. But really, the system that we have here in Ontario is that if you took risk, this could be something which will be an albatross around your neck for a good number of years as you either work through consumer proposals, bankruptcies, or alternatively, the closing with a significant loss, such that your credit is in the toilet for some time.
So is that sort of in reference to how in the US, if you are, way underwater on a mortgage, i.e. You owe like $800,000 on a house, but the house is worth $400,000, you could just basically send the bank the keys and walk away? Is that sort of what you're referring to?
Yeah, so in law that's called a quitclaim deed or dropping your keys off at the bank or anything else. I'm not just referring to I'm not just referring to real estate, though. I mean, the states really until George Bush changed the bankruptcy laws in the states and made it a bit harder to go bankrupt. But until then, there was a belief amongst the legislative class in the United States that facilitating bankruptcies was in the generalized collective interest of an economy because it made for a more vibrant economy. And to the extent that the Americans still have a more vibrant and flexible approach towards bankruptcies and insolvencies, they have a more dynamic economy. I mean, think about it. If at the end of the day you're in your 20s and you have to borrow $250,000 from a bank for a business, and if the bank can pursue you until the age of 45 because it's not easy to go bankrupt, and you're going to ruin your credit record for 7 years, and the insolvency process takes forever, whatever. It's a barrier to taking that risk in the first place. And if what you're trying to do in creating a dynamic, fluid economy is promoting risk and balancing the interest of risk takers and, of course, capital holders, well, you want a more dynamic ability to drop the keys off. We do not have that in Ontario, and certainly not in Ontario's real estate markets.
The first time I stumbled across you was on Twitter, and I believe you went on a you it might have been a thread that you made. This was years ago, and you talked about how you created a bunch of businesses, took on a ton of risk, and had you have just taken your money and started investing in real estate and did nothing, you would have found yourself much more wealthy with a lot more free time than all of these productive things that you went and did. And the reason that I find that interesting, and apologies for the look on your face, maybe that wasn't you who made that thread.
No, that
Well,
was that
that,
was
that,
that
that-
was a
okay,
CBC article that I wrote actually some years ago. Yeah.
okay, maybe somebody else turned it into a thread, but um, I then listen to our politicians talk, and like from my vantage point, I hear from a lot of young people, and there's basically two big complaints here. One is obviously the cost of shelter, right? And young people can't afford a house, but the other thing too is just the lack of job opportunities. And I think that that goes fully in line with what you're saying, that that we don't promote risk taking enough, where it's almost kind of it almost seems like it's kind of insane to go and start a business and take on these risks when you might find yourself in debt for years. And also it's not like it's easy to just go and find financing. Like we work in venture capital. And I mean, like, look, if you're a Waterloo grad and and you finish in computer science and you got a startup idea, you're probably going to be able to go find some sort of accelerator out of the US that's going to take you on. But like, let's take Toby Luckey, for example, from Shopify. Now, obviously, what he did, they were able to largely build from sweat equity early on. But for somebody like him, if what he needed to do to create Shopify required him to go raise capital, he'd have an awfully hard time doing it in this country because there just isn't that many investors and pools out there.
So you started by commenting on the thing that actually keeps me up at night, and which I'm most disappointed with this. I love Canada. I love being here. I love the people. Notwithstanding the fact that we could be more aggressive and more business minded in this country, we certainly could. I really do love this country. But one of the biggest failings that we've experienced over the past 20 years is the failings that we have led to that we have let down our children. I'm a professor down at university, and you see people graduate with $200,000 in debt. Then they enter into a market where their shelter, which is a necessary component of establishing a life, is $1 million. Then we wonder why they're getting married later on in life. And we're blaming it all on avocado toast. Meanwhile, your uncle who purchased their property for three blueberries and a pencil is sitting there talking about how they worked at a coffee shop and therefore everyone else should be able to do this. Well, what you're doing by ladening the younger generations with debt is you're limiting their opportunity. You're limiting their ability to go out and actually take risk. Um, Debt is something we always divided, particularly after the 1960s. There came this term, there's good debt and there's bad debt. And good debt was always seen as real estate, and bad debt was seen as a Ferrari. But truthfully, sometime in the past 20 years, really all real estate debt turned to bad debt unless you were engaged in the bubble. Because what happened fundamentally, particularly in Ontario, is that real estate values, particularly after 2006, that's when the divide started massively divorcing themselves from the underlying Canadian income. And the only way that these were afforded was by government policies that massively increased the monetary supply, which is what happened to the M2 money supply after COVID, right? Where we increased the dollars that were circulating in the economy by 25%. Or alternatively, CMHC policy that encouraged, because Canadians only care about what their monthly payments are, ever lower payments combined with low interest rates, which fundamentally had the effect of pushing up real estate values. By the way, there was another facet that you never hear about, which I was on a podcast yesterday. I mentioned it only for the first time, but it's a fascinating sort of construct. We're in a trade war with China, and we see generally lower consumer price goods as a good thing. But actually, housing was able to take advantage of the Chinese phenomena over the past 20 years in a substantive way that replicated itself in New Zealand, Australia, and Europe, and everywhere else. Because at the end of the day, we all need drills, we all need ladders, we all need a whiteboard, and whatever it is. It used to be the case. And if purchasing those same assets is an ever smaller component of your take home pay, well, then housing can take up more of it and did. In other words, the whole Chinese production of cheaper goods directly play people. It's not like people had more money to save with at the end of the day. Lord knows we have no savings. It just went right into housing and it allowed for more money to be contributed to housing, which is also an interesting factor. But the be all and end all is this: all of this housing growth came at the expense of our children who were not yet in the market. And these people are now left with without a future. There's a reason that there is a reactionary politics that exists amongst the youth today. It's not particularly laden to a given party. It will vote Trump when Biden's in power, and it will vote Polyev when Trudeau or Carney is in power. It will vote anti-establishment because the existing system is not working for them, because they are being left with nothing, and they don't have the ability to enter into the market that we had. I'm 50 years old now. 30 years ago, when I entered into the market, real estate was affordable. I could make a decent income, and then I could have savings. And that's not the reality that kids face today, which is greatly affects social cohesion, and it affects the investing class of 10, 15 years from now. I mean, if you're not putting away now, we all understand how compound interest works. If you're not able to acquire compound interest in your 20s or your 30s, you know what's going to happen in your 40s and your 50s.
I think that that is such a great point, Mark, and it's something that gets lost, with people, especially when I know everybody hates Donald Trump, and it's popular to hate on him right now, but I often think about a documentary, I don't know if you've seen it before, called Roger and Me. It was Michael Moore's first documentary. It put him on the map where he followed around the CEO of General Motors, Roger Smith, for like a year trying to get him in an interview. And the whole thing was basically about how factories in Michigan, specifically Flint, were all closing down and those jobs were going to Mexico. And I think any rational person who watched that documentary at the time would have walked away with there's two solutions to this problem. Either one, you have to put massive tariffs on cars coming in from Mexico to prevent those plants from leaving, or two, you're just gonna have to subsidize the hell out of these auto companies to keep them there. But something had to be done, or else you would end up with a whole bunch of ghost towns. And sure enough, 20 years later, it's like dangerous if you are driving past Flint, Michigan to go and just pull into a gas station. You're afraid you're going to get mugged because it's like a post apocalyptic world.
I definitely think that we've lost focus on bettering the majority of us. And this is not a criticism of America. This is a criticism of most of the Western countries that we live in. Um, when we emerged from World War II, we had a social cohesion that was largely, now granted, the tax rates were insane. And some of the methods that we've, I mean, 78% taxes does not sound appealing. And I'm not trying to sound like a raving socialist here, but I am saying that we have lost focus. When auto workers when willing workers want a job, when our high school students don't have employment, when the only mechanism of getting ahead is to take debt-based risk, to buy basic housing assets, and then that becomes an investment class as opposed to the place where you base your life, we lose something. We lose something so fundamental, actually. It's all well and good. I'm not one of those people who sits there and says everyone should be allowed to study the arts and have 10 years of airy fairy education, with no purpose. Yeah, there's good and there's bad with that, but there is good with that. There is good at allowing people to understand who they are, to go through the exploratory and necessary component of your early 20s where you're just allowed to exist and be without having to really be dragged into the adult world of debt and consequence. We're losing that. And that comes at significant detriment to us as a culture, really. I know this sounds very, as I said, airy fairy, but it's real. There are consequences to putting debt on our younger generations, and it's not a consequence that I think we've properly thought through. My mind, debt absolutely should be available, but to laden our youth with debt is to laden our youth with responsibility, which means to limit our collective opportunities and responsibilities, or opportunities. I mean, when I think of my 20s, I was so much more energized. I had so many ideas. I pursued so many avenues, all of which happened because I didn't have significant debt loads. And I don't know if I would have been able to do that if I was a youth coming out of school today.
It's really interesting stuff. But I got to get on to what I really wanted to talk to you about here, and a lot of thought provoking ideas there. Um, so speaking about how there's this debt based risk, and the young people have to take on, and there's going to be one winner here with everything that's happening and and all this volatility. I got to imagine it's going to be lawyers who are close to the the pain, and that's what I want to ask you about. Is what are you seeing right now? What's the state of the condo market in Toronto?
So it's funny because when you pointed out, um, that lawyers are objective at the very beginning, because not like realtors and mortgage brokers. I actually wanted to point out to you that we have a financial interest when things go bad, like
Yep.
they do when things go good. That financial interest does not necessarily exist in great volume, in the condo market and in the new build space, partially because litigation is never the most attractive or financially advantageous part of a lawyer's practice. Those people who practice law know the sad truth that litigators don't make the money. It's the processing professionals that can build up process. You can't do litigation in volume easily. Some people do. Credit to Gowlings that did their power of sale division and everything else. Some people do, but very few people can do litigation profitably in volume. Whereas if you have a conveyance operation like legal closing or anything else, you're able to do that in volume, and that's where the money comes in. Having said that, if defaults are taking place, what that means for lawyers in the construction space, at least, is litigation. So that's not that profitable. Having said that, the new build failure to close space is a much smaller component of the real estate economy than is the resale space. And the resale space, because the economy is just in the, am I allowed to say crapper? I'll say
Yeah,
crapper.
yeah, yeah.
It's in the crapper now. The power of sales are now way up. And power of sales, even though there's a litigation component, it's a very commoditized service offering. So lawyers are in the money in a way that they haven't been for a long time because power of sale actions are starting to go through the roof. And that is a processable, commoditizable service offering that lawyers haven't exercised for a long time because generally if you ran into trouble, the market was liquid. You put your product out and you paid off your mortgage, and the product was always higher than what you had originally mortgaged for, and there you go. Now we are experiencing a downward market where sometimes you don't even sell for what the power of sale costs are, but lawyers are now intricately involved in that process. That's an ever bigger part of our practice. And those lawyers that are starting out in the area of commoditized law are definitely looking at power of sales in the way that I looked at conveyances for the past 20 years, because that's where the volumes were. So we're changing.
What is conveyances?
Conveyance
I'm
is the transfer of title from a buyer to a seller or
uh,
for a
uh,
refinance.
okay, got it. So right now, what's it like? Is business good?
Are you asking at legalclosing.ca? Because our volumes are up 58% over last year. So yes, it's great. But that is probably because we have chosen to do shows like this and we're developing a bit of a reputation out there. Truthfully, the market is substantially down. The market tracks the performance of MLS for the purposes of resales. What is up is refinances, because people refinance the hell out of things before they go power of sale. So people are continuing to use their homes as the last vestiges of ATMs, and refinances are certainly higher than they were a year ago. The resale market, however, is down. The new build construction market is steadily actually it's somewhat stabilized. And the reason it's stabilized, I'll explain if I can. It's stabilized. Yes, we have 25 to 30% of product that isn't closing for every new build product that came out. But the condo life cycle is 5 years. That is to say, you buy and you close on your product that you signed for 5 years back, because that's how long it takes to build a condo. And the height of a condo boom took place in 2020 to 2022, meaning more product was hitting the market at that point than ever before. So even though we have higher and higher failure rates of 25, 30%, or whatever it may be, that is countered by the fact that we have more and more product that's hitting the market as well as we approach 2027, which is the 5 year point from the 2020-22 height of market. Does that make sense as a concept?
Yeah, yeah. So in terms of, let's talk power of sales. Are those numbers up substantially in so far in 2025 versus the previous couple of years?
Yes. Now, I don't have the stats on hand. There would be better people than me to speak about it because power of sales necessarily hit MLS. And the reason they hit MLS, by the way, is specifically because the builders want to show the course that they're achieving a true sale, that they're not making an improvident sale. So they go to the public markets. And thus, you're able to track MLS and see which banks have listed which properties. So by any measure, they are up, and they are up substantially. And anecdotally, I deal with power sales now almost on a daily basis, whereas I never dealt with power of sales before. So yes, they are massively up both in the data and in my daily experience. Power of sales are really where the future is, if you want, for your average conveyance lawyer like myself.
Okay.
By the way,
So
can I mention one more thing about
yep,
that for your
yep,
audience that you're being
yep.
power of sales is the end of the process.
Okay.
And I don't mean the end of the real estate process. I mean, it's the end of the financial process because people will give up anything before they give up their home. They will stop paying their taxes because the government will just sit in abeyance for a while. They have super priority. They'll stop paying their property taxes. They'll have credit card debt. They'll let their cars go. Their homes are the last thing to go. And they're often tied in with other people because so few people could actually afford property. They actually added mom, dad to the mortgage, brothers, sisters, friends, whatever it was. Used to be used to drive till you qualify. In recent years, what it was you added people till you qualified. And as a result, when you do a power of sale now, you often find that there's more than one person who's being affected by it. And so people have tried everything in their power to avoid it. And as a result, if you're hitting power of sales that are increasing, what we're talking about is people have reached the end of their rope of credit generally. They are hitting the end point. And when I say it's going up, that doesn't augur well for the generalized economy.
So do you get the sense that there's something kind of big happening here? Are we looking at just sort of a healthy correction, or do you get the sense that there's something a lot bigger happening here with the real estate market?
No, there's something bigger happening here. We have a problem. I mean, the fact that Trump has chosen to pick on those areas of the economy where the real estate bubble happened to have grown the largest is magnifies the problem exponentially. I mean, think about it. What did Trump do? Trump has gone ahead and he has tariffed steel and he has tariffed autos. In fact, he's destroying the auto market. And where were these things? These things were in Oakville. They were in Hamilton. They were in St. Catharines. And these are the very areas that the real estate bubble most fermented, most grew. So what we're going to have is we're having this power sale. We're having this massive, everyone refinanced out the wazoo because Canadian incomes were not sufficient to afford our lives for the past 10 years. So we were all using our homes as ATMs. And now we have no underlying basis for the real estate pricing predicated upon the fact that we don't even have jobs in those areas. And so what we're looking at is a substantive problem augmented by politics. I mean, no fault of our own, but still, it's the reality. We have to just deal with the reality. And we have the president of the United States choosing to pick on the area that can probably least sustain being picked on at the present time. And so, no, this is a substantive problem. This is a huge, huge, huge problem. We're going to have mass unemployment at the time, by the way, that we have rising prices. Why rising prices? Well, let's think about it. I mean, it's not that we're imposing tariffs on China, but we're also insignificant in the global market. And China used to ship to Canada because it was already shipping to the States. So why not put it in Long Beach, do whatever it is? But we're 30 million people here. They don't care. It's not as if the same shipping lines are going to be coming here. If the States cuts off their shipping, it's going to affect us even if we don't have tariffs. So we're going to have higher prices while we have greater unemployment. Like you got to feel for the Tiff Macklin here. Like you really do. Like you kind of, it blows your head. Like how do you measure this through interest rates? No, we are in trouble. We are in substantive trouble, and it's going to get worse before it gets better, and it's going to continue to be made worse by the new build construction crisis that isn't going to ebb until 2027 because of what I was previously talking about, where we have that 5-year lag between where the height of market takes place and when we close. So we are in for a proverbial poop show here in Ontario and in Canada. And honestly, if I could close my eyes and go to sleep for 4 years, I'd be very grateful at this point so that I could reemerge into a new and perhaps healthier economy.
Nobody really talked about it during the election. And I thought it was kind of interesting. And it's probably because it's insurance, it's complicated. But Brookfield owns this company that happens to be really, really profitable. And I assume you're familiar with it. They're called Sagan. They generate over $600 million a year in cash flow. And they are the largest competitor to the CMHC. And I look at that and perhaps I'm making a bigger deal about Carney's former position with Brookfield, but I can't help but think that the last thing that he's going to want to see is some sort of massive real estate correction that actually is going to result in mortgage insurers having to make good on those loans. Do you think there's anything that they can do
Sagan,
to
Sagan is always look. First of all, I don't. Brookfield is so large that to ascribe any of its individual policies or any of its individual aspects, like it's you know what it is? It's Matt Taibbi once termed Goldman Sachs the
government sacks?
uh, sorry.
They
No,
used
no,
to call
he
it
called it
government sacks.
the invisible squid, or I forget what it
Okay.
was. It was a brilliant term. Anyways, they had their arms in everything.
Okay.
Brookfield is large enough that they also have their arms in everything. And Carney is not responsible for a Blackstone or a Brookfield. Like, yes, don't get me wrong. He's obviously a fundamental part of it. But to look at Sagan and say this was his plan all along, I mean, that's such a small, insignificant portion of where they are. Having said that, they always had a smarter policy than CMHC because they realized that CMHC was mandated to provide insurance. And what they did was they just picked off less risky parts of the CMHC portfolio. Um, they in every single time that I saw Sagan actually go ahead and make an insurance bet, they were doing so on a more conservative basis than CMHC. So what they were doing was they were having CMHC kind of act as the cover while they were picking off all the good stuff in a substantive way. I'm not overly worried about it, but in addition, the insurers are guarded against default, um, particularly if they're extending on firsts, because of the Canadian reticence to ultimately engage in power of sales and let the keys to their home slide to the bank. Um, it's not something that is seen as acceptable. It's not something that people want to happen. Yes, there will be people who are forced into the position for sure. But this isn't something which starts a trend where people say, "Oh, now I can do that. I want to do that. Let's go." I don't see their position as overtly risky. Having said that, there's going to be losses on the book for the first time in years, for sure, in the CMHC portfolio, in the Thagan portfolio. It's just that's what's going to happen for sure.
So, do you think that there's things that the Canadian government can do or is going to do to try to basically paper over a major correction, or do you think that they will allow it to happen?
Well, can I explain what I think is the big problem first? Because we can't identify what Canada's going to do unless we identify what the problem is. Can I just share with you very briefly where the contagion is? And this is the link that's missing from so much analysis. It is the case that we have this problem in the new build field. Fine, 5% of the real estate is not closed, or 25% of 5% of the real estate is not closing and whatever, and people are going to be in trouble. That's true. The problem is these buildings are built, and highest and best use for product, by definition, continues to be residential use, whether rental or owned. Now, if the market continues to go down, and if it's perceived as going down, no one is buying this product, right? Unless it's at a significant discount. What is going to happen to that product then? If it reverts to the builder or if the bank steps in, doesn't matter. Who cares what the capital stack is behind it? What's going to happen to the product? The product, come hell or high water, whether it's Brookfield that owns it or whether it's Mark Morris that owns it, is going to go out for rent. Because that's the only way you are able to generate income from that product that is already converted to highest and best use without destroying the building and starting again. No one's going to do that. It doesn't make financial sense for a portfolio, for a pro forma. And if that's the case, and if we accept the fundamental proposition that it's better to make $100 than zero, and if we accept the proposition that all the units that are going to come online by 2027 will still come online, whether there are purchasers for it or not, based on where they are in the construction process, well, then what we have is a recipe for falling rents. Now, here's where the contagion spreads. It's because of those falling rents that it starts affecting non-new build construction. And this gets to what should the government do? Because every one of us is reliant upon rents in our basement. There's a tenant there that's helping us pay our mortgage, or we have a rental income for our kids, or whatever it may be. So many Canadians are invested and have used their HELOCs to purchase investment product, even if it's not new. And as a result, the abundance of product that comes out, even if they're in shoebox condos, will affect the remainder of the rental product and market, pushing down prices ever faster, which means there is less money to substantiate and hold on to existing resale assets, even ones that have been held on to for years, particularly given that a lot of those assets had refinances that took place during the bubble where people had refinanced up to higher levels of debt. And so that's where the problem is. How does the government get out of that? I don't know. I mean, at the end of the day, the market is going to, we can already see the market correcting for the real estate problem. They're just not building anything anymore. And so it's expected that by 2030, with no new product coming to the market, eventually the over and abundance that's going to hit the market in 2027, which is when things are going to peter off and fall, will have its effect. And suddenly there's going to be a natural supply demand that is going to reestablish itself. So that's without any government incentive at all. But what do we do to help those people who are indebted? What do we do with our banks? What do we do with the fact that people who cannot afford their life, partially because they're burdened by debt, which is what we talked about at the beginning, are now living with their parents until the age of 30, and their parents are now moving in with their kids in ways that we haven't seen before? I honestly don't know. I don't know. I don't envy policymakers. I'm not sure what the answer is. I know both the conservatives and the liberals had unaffordable and ridiculous plans, at least those people who read through it. Right. What are you talking about? But I mean, the conservative plan was just slightly less ridiculous than the liberal one, but they were both insane. And I don't know what the answer is. I wish I had an answer. I don't have one. And so I don't want to make one up. I don't want to throw something out there. I haven't thought up a good solution to this, where fundamentally there's more and more increased demand, but less and less pricing, because we're still bringing house prices down to account for Canadian income. Meanwhile, Canadian income themselves are shaky based on the tariffs and based on our economic fundamentals, which are not fundamental at all anymore. I don't know. We are not. 10 years ago, I felt like we were so well positioned to take advantage of the world and so well positioned to take advantage of the future. We emerged from 2008 unscathed, our banks in huge, powerful positions. I feel the exact opposite today. I feel that Canada is in a substantively weak position, which, by the way, is fine. We go in cycles and we will eventually rise again, but right now is not bad. And I don't know how we get through it.
Whew. Well, I've gone on longer than I was supposed to. I really appreciate you hopping on here, Mark. A lot of really insightful ideas here. Um, for our audience that wants more of your commentary or they may be looking for your services, where can they go to?
So we're at legalclosing.ca. You're welcome to visit our website. I'm happy to speak anytime. And I will be starting up my own podcasting channel actually in the next couple of months. We just have it underway. I've been enjoying doing this and speaking to people like yourself, Steve, that have a deep understanding of areas that, quite frankly, run alongside the real estate market and thus are part of this ever evolving story. Because what we're talking about is the economy as a whole at the present time. There's no way to kind of divorce real estate any longer from anything else. This is we're talking the same thing, whether you're talking equities or whether you're talking real estate, they're tied together. So I'm hopeful to have you on my show as well, and hopefully we can further our discussions. And I'm very grateful for the opportunity to be here and be able to speak to your audience.
All right. Well, I'd love to do that. And thanks again for hopping on. I always love your commentary. And I'm sure that there's going to be a lot of volatility and there's going to be interest. I have to say, whenever I make real estate, and I'm not even a real estate guy, I'm really just a penny stock scab. But when I make real estate content, the response I get and the views I get are enormous. And I think that that just kind of speaks to how much we've lost our way in this country in terms of every young person's like, how do I get caught up here? It's got to be about real estate, and just the response we get kind of speaks volumes to that.
Wouldn't it be great? This is a final comment. Wouldn't it be great if we started treating housing the way our grandparents did, as a place where you actually stored your underwear and lived your life? And we started treating the stock market as what it is, which is a good way of creating wealth in our economy because our investments then go into productive, active business. I mean, I pine for those days. I'm hopeful that they're around the corner again. And if there's any benefit to the correction that we're going through, it's that people will not look to real estate with rosy eyes, will again discover the fundamentals like cash is king, and perhaps, just perhaps, use their money in smarter ways that ultimately promote Canadian economy and our innovation cycle, which real estate certainly does not.
Well, thanks very much for hopping on, Mark. I always appreciate when we get to chat.
Steve, I really appreciate it as well. Thank you so much.
All right, everybody. Thank you for watching. If you enjoyed this interview, please smash that like button, subscribe, and ring that notification bell. Guys, also let me know what you think in the comment section. Thanks for watching, everyone.